So you've been working hard for your retirement. You're just on the cusp of retiring. Maybe you're already retired and you've been taking money out of your portfolio and you're looking at your account balance. It's going down a little bit more quickly than you'd hoped. You thought that there'd be more growth in the account. And there are moments when you're worrying about whether you'll run out of money. It may not be a legitimate concern, but it's kind of creeping into your thinking. So what if I told you there's a very simple strategy that could add 5 years, 10 years, 15 plus years to the life expectancy of your portfolio, and that the strategy doesn't involve any risky investing, it doesn't involve any extreme budget practices. The secret? Well, the secret is feathering in a little bit of part-time income into your planning. May not be appropriate for all of you, but you'll be shocked how a little bit of part-time income can make a massive difference to your retirement income planning. And we'll show you some case studies to illustrate the point in very concrete ways. Now, what inspired me to put together the case studies was basically a discussion that Larry Berman had on BNN, and it was called the Berman Call. And he was just doing a thought experiment on how you could improve the life expectancy of portfolios. And that's where the discussion on part-time income came up. He had sort of this fictitious person, $500,000 of portfolio value, taking $60,000 out of the portfolio every year. All things being equal, the portfolio was fully depleted going into the person's early 80s. He then said, well, what's the impact of taking $24,000 out less with part-time income from age 65 to 75? And that extended the life expectancy of the portfolio out to early 90s. Now, the scenarios I'm going to show you in Snap projections are not that extreme, and the dollar amounts, again, are pretty low, and they had a huge impact on the retirement. For those of you that have some flexibility around part-time income, contract income, maybe you'll retire, you'll decompress for a while, but it's worth knowing the impact of these calculations, because if you have the ability to sort of move from full work and contract work is an option for you, this could be a great strategy to give you a little more peace of mind and to help your portfolio extend its life expectancy. So Beth has decided to retire in her 60th year, and she feels that she needs $50,000 per year in after-tax income. In terms of her government benefits, when we reviewed her statement for benefits, she's going to get 85% of the CPP maximum. She'll begin the benefits at age 65 for CPP, getting roughly $15,536, and of course she'll have her old age security benefits. So she has no other sources of income that she can rely on. So when we ran the numbers, we began taking money from her portfolio every year. Again, we're earning 6% in this example, and when we showed her the sort of life expectancy of her portfolio and cash flow, she's fully funding her long-term income right through until her 83rd year. In her 83rd year, she's beginning to run shortfalls in cash flows, and you can see that on the balance sheet. Light blue is her financial assets. She fully runs out of those assets by the time she gets into age 83, and then the red represents consistent shortfalls. So obviously she didn't like the look of that particular scenario, so we looked at another scenario integrating some part-time income. So in this analysis, we introduced $10,000 a year of part-time income, index at 3%, no income past age 65, and when we went back to the analysis for Beth, you see that the life expectancy of the income was extended from early 80s right through to about age 88. She liked the look of that much more, and you can see that there's some shortfalls. She has real estate equity shortfalls emerge going into her 88th year. So a much better situation. She thinks that $10,000 per year in part-time income for a period of 6 years is very doable. Now we looked at another scenario where she actually worked for 10 years in terms of part-time income. Let's just take a look at that. So in this analysis, she's doing $10,000 per year until her 70th year. The income is being indexed with the cost of living. When we went back to the analysis for Beth, you can see that there's no shortfalls in this analysis. She's fully funding all of her income needs, and she has financial assets right out to age 90 in the analysis. Beth has lots of energy. She has skills that she can continue using to earn some part-time income. She thinks $1,000 or a little bit less than that per month would be very easy for her to achieve. And she does work that is not super physical, so she thinks that 10 years could be very doable. Now, she asked us to do another analysis where she was working a little bit more, but for a shorter period of time. So let's take a look at that. So in this analysis, Beth is working such that she's generating $24,000 per year of income, index at 3% for 6 years. And so when we introduce that particular assumption, she's fully funding the long-term expenses. She's actually growing her net worth, so rather than having all assets fully depleted by age 90, there's in registered assets still about $353,000. Now, all that means is the part-time income means that she has some flexibility in terms of maybe spending more. She doesn't want to accrue, assets long-term necessarily. But what you can see is a little bit of part-time income feathered into a plan can make a really big difference. Again, not for everyone, but for those of you that have skills that you can continue using to earn income and control your schedule, it can be a wonderful way of just building some peace of mind, social connection. Study after study does confirm that part-time work for retirees has a lot of psychological, emotional, relational benefits that transfer way past just the financial aspects of that. So if you're about to retire, maybe you're already retired, part-time work could have a huge positive impact on your long-term plan. It creates buffer room, extends the life expectancy of your portfolio, can potentially reduce anxiety, not to mention the emotional, psychological, health aspects of working part-time. Studies confirm that consistently. Again, it may not be for everyone, but if it's right for you, you'll want to explore it. Now, if you're wondering how part-time work can impact your retirement plan, make sure you go to the show notes. There's a link back to our website. You can find out how you can schedule a complimentary call to find out more about our planning services, and we'd be happy to model part-time work in your planning, or just to do a plan for you to confirm that you're tracking in the right direction. Anyway, wishing you all the best in your retirement planning. You take care.